The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Mark Yusko, the investor, hedge fund manager, and philanthropist. You are the founder, CEO, and chief investment officer of Morgan Creek Capital Management, the renowned investment firm managing $2 billion in assets. You have over 3 decades of experience in institutional investing and follow the endowment model as a core philosophy. You believe the transition to the blockchain standard is the biggest investment opportunity of a generation, and your expertise and opinion are regularly featured on networks like CNBC, Bloomberg, the New York Times, and the Wall Street Journal. You have said that the greatest wealth is created by being an early investor in innovation, and that a crypto summer could begin as early as the second quarter, with the Bitcoin halving propelling its price beyond $100,000. Mark, welcome to London Real.
No, thanks for having me. Really excited about the conversation today, and I appreciate you wearing the Bitcoin orange scarf. I like it. I guess a pocket square, not the scarf.
Yeah, pocket square. That's good. You saw it. You looked into that. Nobody else in London would have noticed the Bitcoinality of that. So, look, I appreciate that. Can't wait to jump in and talk about all these things. You know, you do have that tweet pinned to your profile for the last 5 years. Saying that the greatest wealth is created by being an early investor in innovation. But the end of that, you say you'll be mocked, ridiculed, and criticized for your non-consensus actions. And then you say it's absolutely worth it. Maybe we start there, because you have a classic way of looking at investing. You've worked for some very classic, seemingly lower risk institutions, and yet your core philosophy is kind of being the one that goes against the grain. Can you speak on that, Mark?
So look, it's really interesting. If you think about what most of us think of as investments, stocks, bonds, currencies, commodities, right? It's where you grew up. It's where I grew up. I mean, we all grew up in some way, shape, or form. But I will argue that none of those exist in the absence of innovation. I actually believe innovation is an asset class that precedes stocks, bonds, currencies, and commodities, right? You have to create the new companies, the new ideas, the new inventions. And so I had this aha moment, a long time ago, 1996. So I was working at my alma mater at Notre Dame, and we had made a bunch of investments in venture capital. And this little company that no one had heard of at the time called Sequoia, right? Now a household name in venture capital, had made a little investment in a company again no one had ever heard of called Google. And our little investment in Sequoia's little fund, about $500,000, grew to about 200 million, right? I would say that there should be a quad at Notre Dame called the Google Quad. And I had this aha moment that investing in that infrastructure, in this innovative idea, was how you make great fortunes. And I've been doing that, the rest of my career. Now, what's funny about that is at the time, our board was like, no, that's a dumb idea. It's a dumb name. Like, now it's a verb, right? You Google it. And at the time, it seemed like a dumb idea. There were 20 search engines. Why did we need another one? Well, they weren't a search engine. They innovated a better way to process information. And most people have no idea that there are 1.7 billion-ish websites in the world. Half of them are owned by Google. So what are you talking about? Like, well, here's the way it works. When you type a question into the search bar at Google, it goes to a website where all the information addressing that question, because that question's probably already been asked. That's why it anticipates what you're typing. And it has a website that has all that information. So they don't have to search the whole internet for the answer. They have it nicely indexed and all these other things. Now, if you happen to ask a new question, then they create another website with that information. And it was that simple innovation that's led to trillions of dollars of value and fundamentally changed the way we all think about searching for information, processing information. And so it's a long-winded way of saying the innovation was what drove the wealth creation, which drove the investment opportunity in the stock of the company, the bonds of the company, and we denominate it in some currency and may interact with commodity markets.
You said innovation is even an asset class in itself. A lot of people would have a hard time with that because it seems like such an intangible. How do you look at it like that?
Well, again, great question. So I look at it like if I want to invest in stocks, it's pretty easy, right? I can buy an ETF, I can buy a mutual fund, I could actually buy the stock. Your old haunt, I could buy a derivative that, derives its value from that underlying security. Okay, that's fine. But what I really want to do is I want to invest in the businesses that are being formed around these new ideas. Well, I do that through venture capital. Well, ultimately, what is venture capital? Well, I'll argue it is that asset class that is innovation because, yes, you take capital, cash, and you invest it in a common stock, a preferred stock, sometimes a convertible bond. So those securities then get created. But because they're private, they don't trade on an exchange and they're really hard to dispose of. Now, they are accreting value for the good ideas and destroying value if it's a bad idea. But ultimately, I will argue that venture capital allocation or growth equity allocation is that asset class. So it's a little bit of a nuance, but that's the way I just like to think about it.
Yeah, it's a really interesting way of looking at it. And so when you started seeing blockchain, for you, it was just a big light bulb. And you said, Brian,
this is innovation. I wish I was that smart. No. I wish it would have been a fast light bulb. I'd be a lot wealthier. So I joke, and it's actually not a joke because it's true. I was handed Bitcoin and blockchain technology on a silver platter the same month as the Winklevoss twins, May 2013. Problem was, I was not partying with Charlie Shrem in Ibiza. I was with my friend Dan Moorhead, who was telling me that after 10 years working together, where we had funded his hedge fund, this macro hedge fund, that he was shutting down the hedge fund. He was going to send all the money back. And he was going to spend the rest of his career focused on blockchain and Bitcoin. And look, in 2013, I was not running drugs on Silk Road. I was not a cryptography student. When he said the word Bitcoin, I'm like, yeah, I've heard of it, but whatever. When he said blockchain and infrastructure, I'm like, I'm in. Venture capital, innovation as an asset class. He explained the whole idea that it's a ledger. I got that. Now, I should have got Bitcoin, but I didn't. And so I was a traditional investor. And Bitcoin was kind of this weird thing that a bunch of nerds and geeks were playing with their magic internet money. And I talk about that period, 2009 to kind of 15 was the first they ignore you phase. Just a bunch of nerds and geeks playing with your magic internet, whatever. But I was intrigued, and my friend, who I respect and admire, was going down this path. And he went from managing $1 billion, Brian, to 17 million. People thought he was crazy. They gave him $17 million to launch his blockchain fund and only about a couple $100,000 in his Bitcoin fund. And I put money in the blockchain fund, which is up, 12, 15 times. That's great. But I should have put the money in the Bitcoin fund. It's up 350 times, but that's another story. I didn't. But 9 months later, first quarter 2014, I used to write these long letters to my clients. I mean, they were long, like 40 pages. Like my longest was 87 pages. And everybody said, why do you write so much? No one's going to read that. I'm like, it's not for them. It's for me. If I can't read what I wrote, how do I know what I think? So the process of writing it helped me think about markets. And if people wanted to read it, great. But I wrote one paragraph in 2014 that said Bitcoin was an interesting special situation. I got hate. I mean, Brian, people said they would fire me. They said, you're an idiot. Don't talk about this stuff. Go back and do your job, stocks, bonds, currencies, commodities. Wow. Like, okay. And the price was $500. This was March. By September, it was 178. I'm like, they were right. 6 weeks later, $1,000. Like, no, there's something here. I talked to my friend Dan. I'm starting to really understand what this was. And it's triple entry accounting, which is the real innovation. Make a long story short, my son graduated from college in 2015. And he's always wanted to live in San Francisco. Since he was a little kid, he's wanted to move from Chapel Hill to San Francisco. That's where all the tech is. And I said, all right, go talk to Dan. He'll get you a job at Coinbase. It'll be great. So he goes out, talks to Coinbase. He's like, I don't know, Dad. Maybe it's going to be a big deal, but I'm going to go with KPMG. It's safe, gets me to San Francisco. And I'm like, you're going to hate it, which he did. He quit after 9 months and he did hate it. And when Coinbase went public, he called me up and said, all right, fine, Dad, you were right. Should have gone to Coinbase, but you're not as smart as you think you are. I'm like, oh, do tell. I told you to go to work at Coinbase. Like, yeah, but you didn't lever up the house and put it all in Bitcoin. Like that is fact. And so in 16, I finally convinced clients to get over the fear. We finally embraced it, but we didn't go all in. We started out, but by then I had that aha moment. So it took me almost 4 years to have the light bulb moment. And I actually couldn't make this up. I was in an RV, again, with my son and my rest of my family in Eureka, California, right? And I had the aha moment, literally the Eureka moment, where I realized that blockchain technology is simply an operating system. And there have been lots of operating systems, right? Mainframes ran on COBOL and Fortran. Mini computers ran on Spark. The personal computers run on DOS or Windows. The internet runs on TCP/IP, which you and I are using right now. The mobile net runs on iOS and Android. And the truth net, which is the internet of value, will run on blockchains. And once I saw that, I couldn't unsee it. And that's why I spent most of the last 5 years focused in the space.
TruthNet. What do you mean by that?
Great. So if you think about what the internet did, let's back up even further. So for hundreds of years, actually probably thousands of years, the church had a monopoly on information, right? People couldn't read and write by and large, and there weren't printed textbooks. And you went to church and they told you as the elders kind of what to think, how to think. They reported the news and they controlled the information. Gutenberg came along with the printing press, busted that monopoly wide open. You could now print things, you could disseminate, still had to teach people to read and write, but busted the monopoly. So the monopoly shifted to the state. State-owned media or state-influenced media controlled the narrative. But then the internet busted that wide open because the internet made information bidirectional for the first time. In the old days, you and I wanted to invest in Argentina, and we were concerned about the election. What did we do? We waited for someone in New York to fly a reporter down to BA, write a story, send it back. The editor thinks about it. 2 days later, it's on the third page of the New York Times. Maybe we read it. Today, what do? I go on the internet. I go on Twitter. I go to a Periscope, and I see people lined up for days in the rain, waiting to vote, chanting this guy's name. He's going to win. So information became bidirectional. And what did that do? Well, it busted the monopoly of media and commerce. So ABC, NBC, CBS, all their market cap went to Netflix. All the mom and pop stores, their market cap went to Amazon. Well, what does blockchain do? Well, blockchain busts the monopoly of finance. So for 800 years, the finance companies have had a monopoly on trust. In the old days, I lent you money. Literally, I lent you money. Okay, here's $100. You come back a year later to pay me 110. I had written down in my ledger, not 100, but I'm an unscrupulous guy. I wrote down 200. I broke the trust. Right? You trusted that I wrote down 100, single entry accounting. So 800 years ago, the Medicis, the benevolent Medicis, came along and said, all right, Brian, you keep a ledger. Mark, you keep a ledger. And we, the benevolent Medicis, for a small fee, will make sure that the ledgers match. So that Mark wrote down 100, Brian wrote down 100. But I could pay the Medicis a little less, something. And I write down 200 and they're like, oh, Brian, Mark's ledger is right. You owe him 200. So we had to trust that these third parties, these banks, were doing the right thing. And for 800 years, they've had a great run. And they make lots of money being the trusted third parties between the exchange of value. So like if I wanted to send you money, you have to have a bank account, I have to have a bank account, and they charge us a fee. We trust that my money is safe in the bank, that I send it to you, that they actually send it to you, and that you get it. That's all trust. Well, what blockchain technology does is it goes from dual entry accounting to triple entry accounting. Now you have a ledger, I have a ledger, but there's this third ledger that exists in an encrypted form permanently, immutably. We don't need to trust anybody. We have truth, right? Mark has a Bitcoin. It's on the ledger. Mark sends it to Brian. It's on the ledger. Truth. We're replacing trust with truth. The internet, the mobile net, the truth net.
And how does that change humanity? Because that's what gets fascinating. You'd sound like it's just an accounting system. It's just a ledger here or over there. It's a little book or a thing. But it actually changes the way we interact with each other as humans in a massive way.
In a massive way. And again, it's funny. Someone said, what's the key to a great interview or a great podcast or whatever? And people say, you invite good guests and you let them talk. Like, nope, that's not it. What makes a great interview or podcast is asking great questions, doing research, preparing, knowing the topic, asking good questions, but then listening to the answer and asking better follow-up questions, which is exactly what you just did. That better follow-up question is okay, yeah, you described this thing. It's interesting tech. That's fine. But wait a minute. This fundamentally changes how humanity interacts. That's a big statement. That's a big question, but it's exactly right. And the insight is this. If we think about how we have interacted, okay, for the last 800 odd years, we all have this relationship to things that we think we own, right? So we have things of value. But do we? We're actually experiencing today. There are bank runs happening in the United States and all over. Why? Well, because people are realizing that, wait, when you put your money in the bank, it's no longer your money. It's the bank's money. And you have an IOU that most of the time is money good, unless you woke up in Cyprus in 2012 and they took 3/4 of it to, plug the hole. Or this morning at Silicon Valley Bank, maybe it's not, but it'll all be there because the FDIC will step in or JP Morgan will step in, probably announce they're going to buy them on Sunday. And all of that is to say we have this trust relationship with these bigger institutions, and they verify who we are, KYC, AML, all of this stuff. And they are the gating agent so that you and I can transact.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.